Thanks for joining me. It's Sunday, the 11th of February. I'm going to run through some markets with my ideas, trade ideas for the week, show you where these trade ideas came from. If you're not a subscriber, there are 3 links below. The first one is to sign up for my free 5-day challenge. If you haven't done it yet, you've got to sign up for that. The second link is to join my free Telegram group where you'll get analysis, links to videos. And the third link is if you want to sign up for my daily signals delivered on Telegram each morning at around 3 a.m. GMT. Okay, let's crack on. Gold, as you can see, as I've been talking about for many weeks, in a sideways trend. We're up for a day, maybe 2, then we're down for a day, maybe 2. We're really going absolutely nowhere. As you can see, we closed on Friday at around 2024. That was exactly where we were a couple of weeks ago at the beginning of January, and then at the beginning of December, middle of December. It's even where we were at the beginning of May last year. We're just not going anywhere. We go up a bit, we go down a bit. We're just staying within a very tight range. So what can you do? Well, on the daily chart, there is clearly no trend for me to follow whatsoever. Even the moving averages on the daily chart are flatlining now. The 500-day moving average, that's a really long-term moving average, is very, very flat indeed. And of course, the 100 and the 200 are just converging to emphasize the fact that even in the very long term, we're going nowhere. So hourly chart is the only thing I've got to go on. And there's really only one area that I'm using as a trade idea. And that's from this trend line, which goes back to the middle of December. So that's now 2 months old. It's been working quite well. It worked well on 2 occasions last week. We had buy orders down there. You can see that there is some resistance in the low 20-30 area. I don't think I personally would be trying shorts there. It's not really a resistance area for me, even though it has been holding things back. Why has it been holding the market back? Probably it's the 200 hour moving average. There is a 200 period moving average on the 4-hour chart there also. So if you trust those moving averages, then you might want to be selling in the mid 20-30 area and seeing if you can scalp down to sort of 2025, 2020. WTI Crude appears to be caught in this channel here. I could call it a bear flag. I'm not 100% sure. We'll have to see if we break the lower trend line of this channel. But again, moving averages on the daily chart, 500, 200, and 100, all flatlining because oil has been trading sideways for so long, really since November of 2022. Now, that is a heck of a long time for oil to just be trading in this sideways direction. I can just put trend lines up just to emphasize the fact that we really are stuck in this sideways channel. 38.2% fib is kind of holding the market on the rally. 200, 100-day moving averages are converging. So that does give us some resistance around the $78 area. But if we break up through there, we'll be testing the upper trend line to this rising channel. And then on the downside, you've got to watch for the break of the lower trend line of the rising channel. But that's clearly the pattern that we're trading in at the moment in WTI crude oil. Here is a trend, a rare thing at the moment, but we do have a bull trend in the New Zealand dollar versus the Japanese yen. That has been a bull trend since March of 23. So getting on for a 1-year bull trend. Now, it's not been easy to trade it, of course. We've had these deep setbacks, periods of moving sideways. I mean, this really was impossible to trade, but you can't deny the fact that if I isolate this data here, we are in something of a bull trend. Now, why is this important? Because although it's been untradeable for months, and again here, up one day, down the next, all the way through January, moved down to my support area, which unfortunately didn't quite hit our buy area, just missed it by a few pips. You can see why I had it. Confluence of Fibonacci levels, good trend line going back to June 2023. And we had the 100-day moving average. Yes, it was a little bit higher than the buy-in area, and that was actually what caught it in the end. So although I missed that trade, we are pushing higher, and we've broken the previous high. So for me, this is really important now. This could be the beginning of a new leg higher for the New Zealand dollar versus the Japanese yen. We'll have a look at some more yen pairs and see if the yen is weakening across the board. Well, the dollar yen is in something of a bull trend. More recently, I mean, you can see that over a period of time, again, mostly trading sideways. This could be a head and shoulders pattern. This could be a left shoulder. This could be a head. This could be a right shoulder. Although now we're starting to push higher again. The yen weakening against the US dollar. The US dollar looking quite strong across a number of pairs. So maybe that won't materialize. We're going to have to really look at the short-term chart, the 1-hour chart, if we're going to identify the trend. And we are now clearly in a bull trend for 5 weeks or so. So what I would be doing is looking to buy on any pullback. So I put my fib levels on there. I would take a second set of fib levels from just here, just below the 61.8% fib. And then I would take a third set of fib levels from this area of confluence. Now I've got quite a lot of support levels, and I put my trend lines on as well. I'd say this looks like a trend line to me. Probably would even put one on here. This consolidation area. Yeah, that looks reasonable. That's definitely caught the price action. So there's the setup now for my dollar yen chart. Good support around 148.70. We've got some previous swing highs just above there. So 148.80, 148.70 would be a good support level. I've got the 100-hour moving average lending extra weight there. If we pull back in the bull trend, I want to be a buyer. If we were to fall as far as 148.20, 148.00, this looks like a super strong support level. We've got two areas of Fibonacci support. We've got the 200-hour moving average if we get there relatively quickly, of course. We've got the trend line that I just drew on there. So that would be the main support area on any pullback for the dollar yen this week. Unlikely, but if we then broke down to 147.50, 147.30, that would also be a strong support level. Lots of Fibonacci confluence, some previous swing lows, trend line going back about a month. That would be good enough for me to try a long position there. So we've got three big levels on a pullback. I'm not saying we will pull back. We're in a decent 5-week bull trend for the dollar yen. So the question now is, do we push up to retest the previous high for the dollar yen, which we reached around October, November last year? We've got a double top there already. So do we get a triple top, or do we break up and then start a new leg higher for the dollar yen? I don't know. We'll have to see what happens. But it's getting a little bit more interesting for the dollar yen right now. Now, the euro yen is a bit of a mess. You can see I've littered my chart with trend lines. Again, moving averages, 50, 100. They're just flatlining on the daily chart. I really don't have anything to go on with this. Yes, we are in a bull trend, but this consolidation period over the last, since June last year, really doesn't give me anything to go on. If you've got some ideas, put them in the comments box. Put them in the comments box and help me out here. Canadian dollar versus Japanese yen in this horrible sideways pattern for such a long time, since at least June of last year. Totally unpredictable, very random, very erratic. So the question now is, are we going to break above 111.17 and start a new leg higher? When we look at the weekly chart, we can see a real strong bull trend. This just looks like a normal pullback, and then we've resumed. No clear pattern, really. I can't call that any sort of flag, triangle, pennant, anything like that. So the question really now is, do we break above the previous high and start a new leg higher in the bull trend? On Friday, we got to 111.32. We're going to need something a little bit more bullish, a good green candle to indicate that we are having a proper breakout of the recent sideways range. Okay, this is part 2 of my video. If you've already watched my gold oil analysis and the yen pairs, we're going to move on to the dollar now. The dollar, you can see very clearly how we have been stuck in this horrible sideways range. I'm fed up with these sideways markets. This is the daily chart of the dollar index going back to December 22. So this is over 2 years old. And you can see we've just been in this horrible sideways range, very difficult to predict. Look at this period here, for almost 3 weeks, up one day, down the next day. Every time we moved up or moved down, we just gravitated back towards the middle of the range. Lots of doji candles indicating quite a balance between buyers and sellers. No one taking control of the market. Then you get this big red candle to the downside. Looks like we might be starting some momentum. No, it wasn't to be. We got this green bullish engulfing candle, which I'm going to read as quite positive. I thought, here we go. We've got a breakout of the sideways channel, and we got two nice green candles. I thought we're going to start to move. We've got a trend in the dollar. Monday was the follow through from the big Friday. Oh yeah, that candle came when we had the strong non-farm payroll number, which blew away the estimates. So big move up in the dollar on the Friday, follow through on the Monday. It looked like we had a trend to trade, and since then we have just gone sideways, holding within Monday's range all through last week. It really is a frustrating period for us Forex traders. But when I isolate the data on a 1-hour chart, we do have something of a bull trend. And this is what I'm focused on now. The economic data is strong. The FOMC members are talking about higher rates for longer. I'm still of the belief that the bull trend can be maintained. So we broke out of this sideways consolidation period, which had lasted about 5 weeks. We've now just only started a new sideways consolidation, but I'm hoping that eventually we can break up. What can I call this pattern? I guess I could call it something of a triangle, a descending triangle, which is actually normally not bullish, but in this case, I think it could be. We've obviously got support for the dollar index from anywhere around the area down to 103.65. If you're trading dollar pairs, you might want to keep an eye on this one during the week. If we break below 103.60, it's going to look less appealing to be long the US dollar. The first resistance level in the euro versus the US dollar was hit. I'm looking to sell the euro US dollar because I'm looking to buy the dollar. Obviously, shorting euro US dollar gets us into a long position. This is the hourly chart for the euro versus the US dollar. 23.6% fib resistance around 107.80, 107.90. It worked. The resistance level worked, but the problem is the markets are just not moving enough. Look how beautifully the 200-hour moving average is holding that recovery. But the problem is we hit the resistance levels and we just don't move. So you've either got to run these positions overnight, or even over the weekend to see if they're going to materialize into a profit eventually. I'm going to show you my cable chart, pound versus the dollar, not because I've got any trade ideas, but just to show you an example of this is just how difficult things have been. This is December 2023 through to where we are now. I thought that we had a break below this trend line to give us a sustained move to the downside. I was suggesting a short on the return to the break point, but it wasn't to be. The market straight back up in here on the daily chart. Again, a big up move, then down for a couple of days, big up move, then a big down move. We're just up for a couple of days, down for a couple of days, going absolutely nowhere all through most of December and all of January and beginning of February. And even when I thought we had a break to the downside, no, it wasn't to be. Big red candle, and then we just recovered and traded sideways. It's a really frustrating time for us Forex traders, but I'd still do manage to find some trade ideas every day. And one of those examples that we traded last week was the short in the Aussie dollar. Yes, we are in something of a bear trend. You can see around the 65.30 area, we have resistance from previous swing lows, previous swing highs. We've got the Fibonacci level, and we've got the 200-hour moving average. The first short position that we put on here did actually work. I'm hoping to see a repeat. The trouble is, on Friday, we came up, we had a good run up, we hit the resistance level, and then we just didn't really move. We stayed within a sort of 20 pip range. So we'll see if that resistance level does work and the market does turn around and the dollar does strengthen this week. We've got excellent resistance around the 65.60, 65.70 area. We've got trend lines. We've got confluence of Fibonacci levels. We've got previous swing lows here. You can see from that sideways channel, we've got the 500-hour moving average. That really is a terrific resistance area if we do continue a little higher next week. Okay, that's it for me. Make sure you're subscribed and ring the bell because I'll be putting out some more videos during the week.